Welcome back, Benedict, to another edition of Marketing Minutes. It's great that you can join me today. How are you getting on?
Yeah, everything is fine here in Valencia. And
Great stuff.
yeah, I'm very pleased to be here with you and to comment about the market in Southern Europe, mainly Spain and Italy.
That's it. Yeah, we'll be drawing on some of the research from the European Steel Review, which covers those countries, and you're obviously behind a large proportion of that research. So hopefully you'll have lots of insight to share as we take a look at those in the next few minutes. I mean, if you're happy to get going, Benedict, one of the things I've noticed clearly is the implementation of CBAM taxes from January 1st has brought a lot of uncertainty for Southern Europe steel importers in particular. Could you illuminate us on how this and other factors is currently affecting domestic supply?
Right. Well, I would say that a lot of service centers and stockholders have stopped importing, especially the small to medium sized. But even the large service centers have, let's say, paused their imports until they have more clarity on CBAM calculation, because it is true that, and we said that last month, the default country value are unworkable. And obviously, a lot of them are even traders who specialize in offering DDP values. They are working with a list of very reliable suppliers, third country suppliers, who think they will be able to provide their own certified values, but this is not sure yet, and this is not going to happen before next year.
Yeah.
So imports is on hold for now, has stopped or has been paused. Some are still doing it safe condition, but very few. And people who are doing it are increasingly using DDP conditions with large, reliable traders. And on top of that, we have the still anti-dumping investigation pending on coil against Japan, Taiwan, Turkey, India, and Vietnam. And we have the new safeguard measures that are going to start on the 1st of July. So it's just a lot of complications for importing, and it seems to be much easier now to go with European material.
I guess we'll see that the influence of those upcoming safeguard measures changes, the quota changes, having an effect a little later in the year. The cold rolled issue is right now, though, isn't it, Benedict? It's having effect on the market now.
Well, the decision has not been announced yet, but so there is a lot of speculation. People think that it might start from April. So there is just very little imports of coal roll at the moment, except DDP conditions. And then, yes, the safeguard is going to reduce the quotas, increase the new safeguards, increase the taxes. So we are now, so I mean, as we saw last month, some quotas already filled up. In January, which we reported last month, hot roll coal from India, cold roll coal from Turkey, Taiwan, Vietnam's nearly full, galvanized from Turkey and Vietnam, also from China for the automotive. And there is still some material imports. There are still ships queuing to be unloaded. There are still ships due for arrival. So the Q2 custom clearance is also going to be interesting. And then from the 1st of July, it's going to be a bit of chaos, because then the quotas will be much smaller.
Yeah, a lot of added costs that people won't have seen before this year, isn't it? CBAM and the increased safeguard restrictions. So I'm curious to know how we've started the year from a demand perspective. I mean, a lot of the headlines from manufacturing from Southern Europe that I've seen have related to automotive demand, and a decline in production throughout 2025 was noted. But still, Spain's GDP looks really strong. What is demand looking like at the start of 2026?
So it's true. Automotive is negative. I was looking at the 2025 figures, and they are car production figures, and they're down both in Spain and Italy year on year. Then I've just heard that maybe there is a feeling that the Italian auto sector has touched bottom, but then I think they said that at the end of last year as well. But it looks like it can only go up from now. And then it is true that construction is stronger in Spain. But then there is also an important sector for Spain and Italy, which is solar panel. And this seems to be a bit better in Italy than in Spain. So it very much depends on the sector. It looks like volumes are holding. So in terms of real demand, is going to be quite similar to last year. And a lot of people were saying there has been an improvement in apparent demand because prices are going up. But I think this has been short-lived, or it seems to have deflated. And I think this is due to the lack of apparent demand is maybe due to the lack of confidence in prospects for real demand, which I don't think is going to be much better than last year. At least we're holding volumes. Yeah, absolutely. So a lot of people mentioned it seemed to be more apparent in Northern Europe. You tell me if it was the same in Southern Europe, that the market was a little bit slow to get back into its usual rhythm after the Christmas and New Year break. Yes, and then it seems to have improved. So from what I heard so far, volumes in January held, but it's always in the context of very strong competition, and those distributors who tried to increase their prices lost their orders. So it's kind of you hold volumes at the expense of profitability, which hopefully is what's going to change this year with prices increasing. But I kind of would like to go back to the offer side because in that kind of reshuffling of imports, and I did say that imports are being paused, but people are, Southern Europe is traditionally a region that has been importing a lot, and there are a lot of traders, there are large service centers who rely on importing, and everybody is still looking for a way to import, and some origins obviously are no longer attractive, like Indonesia, but some new origins are appearing, and obviously everybody needs to look at what CBAM is going to be. But I've heard of Thailand, Brazil, Mexico, Canada, Pakistan. So people are still looking at what they can do. They just need to know exactly what the new conditions are. So that's the offer from the imports. And then because everybody is kind of going back to Europe, I think it's important to also look at can the European mills offer what is no longer being imported. And I've noted here a bit of an imbalance because so the region which was mostly importing is Southern Europe, and which has now stopped importing is Southern Europe. So there is a greater need here for European material, and it's just the region where European production is limited, because we've got ArcelorMittal ramping up production in France, in southern France, in Fos-sur-Mer, and also in northern Spain, in Asturias. So the production is still limited there. And now you have Northern Europe, which where maybe there were fewer imports, but there is more production. So there is an imbalance where more production is needed in Southern Europe, but it's not happening yet. And the Spanish buyers have reported some delays in deliveries, which may also be due to some transport problems, But also because at the moment production is still limited in those two ArcelorMittal South European plants.
So as we suspected coming into the year, it's probably going to be a case that a supply or a realigning of supply routes is going to be the factor that drives up prices and not an increase in demand by the sounds of things.
Yes, it's definitely that's definitely what's happening.
So staying along those lines then, Benedicte, taking all those things into account, could you sort of give us a little bit of an insight into MEPS outlook for Southern Europe steel market, and crucially give us a little bit of insight into the price forecasts and the direction that they're headed at the moment?
So I've been looking at prices this morning after doing a good chunk of my phone calls, well, looking at hot rolled coil, because this is the main product. Hot rolled coil prices bottomed out in Southern Europe back in the summer, and since then they have increased by €100, including this month's rise. And so this month's research, and we haven't confirmed the figures yet, because this is ahead of the publication of the express tables. But I think I can say that probably hot rolled coil prices in Spain and Italy will increase by about another €20. Compared to January, which, since the prices bottomed out last summer, this is already an increase of €100. And then cold rolled and galvanized prices are even increasing faster. Cold roll is particularly tight because the risk on imports, because of that anti-dumping investigation that I was mentioning at the beginning of the podcast, imports are getting so risky that hardly anybody is importing anymore, or DDP, and the European production is really limited because European mills traditionally were using that cold rolled coil to produce galvanized materials. So in Southern Europe, and especially in Spain, the cold rolled coils is becoming quite tight. So as a result, we've seen the gap between hot roll and cold rolled and hot roll and galvanized widen to maybe 120 for hot roll galvanized, and the gap between hot roll and cold roll even widened to 130, 140, because cold roll coils have become pricier than galvanized coils, which I think maybe European mills will refocus their production on cold roll, which is becoming more attractive in terms of prices.
Yeah, so that tightening of supply clearly, putting us into that upward trajectory, and prices are rising steadily by the sounds of it, Benedicte.
Yeah, and also distribution prices have been rising. There is still a lot of catching up to do, which is mainly due to the amount of cheap material that is in stock that arrived. A massive amount of material was custom clear until the end of last year, so stockholders are still living on this. And the good news is that they are in a position to, so their prices are still not in line with their repurchasing price, but they are able to revalue their stock, which is good news. And then the grades that are traditionally more difficult to get, like cold rolled coil, like 2 meter wide, or pickle and oil, they might become even more difficult to get. So some people are thinking that when these stocks actually get sold and get used, some people expect some shortages. And also the problem with the material that is coming now, after the 1st of January, is that some people are not selling it just yet because they don't know how to price it, because they don't know how to calculate CBAM. So there is material in stock that distributors say, I'm not selling it because I don't know how much it's going to cost me. Yeah,
and that gamble carries on until well into next year, we would imagine, Benedicte, until those verified numbers come in.
Yes, obviously there is still a lot of material that arrives before the end of the year, and that is being sold, but there is still material that is arriving, and that is in ports waiting, and here importers do not really know how much that's going to cost them.
Lovely. And how about longs, Benedicte?
So long products have some catching up to do, because mills were really struggling to raise prices at the end of last year. But mills since the beginning of the year have become firmer on the back of higher scrap and energy prices. Electricity prices in Italy and Spain have risen quite significantly since January on December. And some mills have reduced production because they had quite long shutdowns during the Christmas holiday. So we are also seeing this month maybe increases of long products. I mean, not as high as for coils, but maybe 10-20 euros, which is still not as much as mills are looking, because they were looking up to 30 euros, but still it is the longs are also looking up. It is true that the CBAM is mainly having an impact on coil edge, so on longs, maybe on wire rod, because there are quite a lot of imports on wire rod, and most drawing companies I speak to in Italy and Spain have told me that they have now stopped importing, and obviously they do have quite a lot of stock because they were receiving material until the end of last year. But once this is out of the way, they will have to they are actually now buying European material at higher prices.
Okay, so the longs price is going up as well.
Yes, so in the end, even though real demand remains quite similar and apparent demand is not that high, it looks like profitability is increasing for everybody, and that's much needed and welcome.
Great stuff. Well, we'll leave it there if that's okay, Benedicte.
Yes.
Thanks ever so much for your time. Thanks for joining the Marketing Minutes podcast again and giving us an oversight, which is bang up to date, because you've been making calls this month already. So encourage people to obviously go off and subscribe to the European Steel Review, where they get a full overview of Northern and Southern Europe with commentary, prices, price indices, and 12 months forecast. But for now, we'll leave it there. Thanks, Benedicte. I'll see you again soon.
Thanks for having me, Tom. Bye.
Bye-bye.